Yes. Can you hear me now? Hopefully you can hear me now. Yes. Okay. Okay. Great. All right. Despite the minor technical issues, I think we can start. Okay, so let me repeat everything I said from the beginning because clearly you guys had no sound. Um, all right, so I was mentioning that as per usual, every week we're gonna be checking on what's happening in the markets, what data do we have on the economic calendar, and then we're gonna be checking on charts. Feel free to post your questions or any instruments that you want me to analyze if I don't go through them. We're gonna go through gold, that's for sure. So if you have anything else apart from gold, all right. Before we begin, let me guys know where you're watching us from. Just type your country or send the flag or something so I know where you guys watch us from, and we can begin shortly after that. Okay, so what's happening this week? South Africa. Hello, Kalimantan. Hope I said that correctly. South Africa. Okay. Hello to South Africa. All right. So, what do we have this week? Yesterday we had some Chinese data, exports, imports, balance of trade, and etc. Is it important? Yes. Is it affecting markets that much? I wouldn't say so. But it's important to see what's happening with Chinese economy overall. Today, early in the morning, we had the Reserve Bank of Australia's interest rate decision. It was expected to remain stable at 3.6, and that's exactly what we got. Balance of trade, yeah, from Germany, it was expected to decline by a million or something, but it came out over 1.6 billion improved. So German economy quite strong, and that's overall bullish news for the Europe. Um, Later on, we have job openings from the US. Slight decline, 27,000 jobs decline in job openings, but this is for September, so probably that's already priced in. Tomorrow we have Chinese inflation in the morning. Is expected to rise to 0.9%, and then we have the most major news for this week, which is the Bank of Canada's interest rate decision, which is expected to remain stable at 2.25, and then we have the Fed's meeting 7 p.m. GMT. That's expected to go down by 0.25%. Okay. Fed Chair Jerome Powell is gonna comment on. Usually, the press conference affects the markets more than the actual release. Why? Because we already know, not for sure, but at a great extent, we kind of know from beforehand what's gonna happen. So currently, if you go to FedWatch CMEgroup.com, you select the markets, interest rates, and then CME FedWatch tool. You'll land on this website where you can see the probabilities of the Fed's meetings, not just the upcoming one, but also the ones after. So we tend to know, inverted commas, from beforehand what the probabilities and expectations are for the interest rates. In this case, the current rate is 375 and almost 90% probability of a rate cut going to it's 4 and it's going down to 375. So we already know from beforehand what's the probabilities of cutting or holding or hiking the interest rates. So why am I mentioning that? Because that's already most of it priced in. We always there is always room for a surprise, right? So the Fed meeting tomorrow might say we're gonna continue holding it at 4%. So if that happens, then there is a different reaction in the market. But if it does go down to 375, then that's already priced in. Market participants are already expecting that. So what's important, and that's why am I saying the press conference affects more than the actual release, because if it does go down, then it's already expected, and then the focus is on the press conference. But there are cases that probabilities were pointing towards a cut or a hike or a hold, but then we got a surprise. In the unlike case that we do have a surprise and the Fed says we're gonna hold at 4%, then that's gonna be bullish for the dollar and more bearish against the pair and on the pairs traded against the dollar, for example, Euro USD or pound dollar, etc. Okay, that's it on news for this week. Nothing too major apart from Fed meeting and Bank of Canada's meeting tomorrow. On Friday, we also have the British GDP month over month. This is for October, however. So again, might already be priced in, but in case that we see a big surprise on the actual release, the expectations is to rise by 0.2%, going from negative 0.1 to 0.1. Small change, it's for October, probably priced in, but if we see it as a price, then volatility is gonna spike. All right, so before we proceed with charts, I wanted to mention what happened last week. We had unemployment from Canada improving. It was 6.9 and it was expected to get slightly worse to 7%, but it came down at 6.5. So in combination with what's happening this week for Canada, where the interest rate is expected to remain stable, whereas the US is expected to go down, then that's somewhat bullish on the Canadian dollar against the US dollar. So bearish on USD Canadian loonie, which we're gonna check later on. And we also got the core PCE index. Again, it was for September. It was expected to remain the same at 0.2%. That's what we got. No surprises there. And also we had the services PMI from the USA last Wednesday. It came out slightly better than expected, but what's important is that it came out above the 50 basis point. So that means that services sector in the States is still growing in majority of 2025, if not the whole of 2025. Apart from May, it's been growing for the majority of 2025. So that means that we have a robust services sector in the States, manufacturing as always, is lagging behind. Manufacturing in the States has not been performing that well in 2025. You see, last time it was above the 50 basis point, it was back in February, and since then, manufacturing sector has been somewhat declining. Tariffs in April didn't help much, as we can see here, the manufacturing sector in the States, but might need more time to get that data. All right. Now, let's proceed with our charts. Again, if you guys need any significant instrument that I don't go through, please feel free to text in the chat so I can go through it. Okay. Before I continue with the charts, let me know, guys, what time frame are you using mostly? Is it like more long term? Are you using minute chart? Are you a scalper? What's your preferred time frame to trade on? I want to know what's going on with Bitcoin. Decline to go up. Yeah, we're gonna be checking on Bitcoin. Yes, of course. Long term, so I take it. I also am. I like long term, so daily it is. All right. We're also going to discuss Netflix, the share price, and what's happening with Netflix and Warner Brothers. 1 hour and daily. Okay, that's good. All right. So I also like daily charts. That's my go-to time frame for my my analysis and my strategy and my trading style. I don't really like scalping. I prefer more long-term strategies where I can just adjust slightly my strategy or mindset and set my targets and just let my trades be. That's how I like to trade. I don't like the stress of adjusting, modifying, or anything like modify my stop loss, give it a little bit of more room or anything. I just like to make my analysis, put my stop loss, take profit targets, put my pending orders. Usually it's pending orders. I almost never do market execution because I like my trades to be fulfilled on the prices that I like, not the broker. And just let it be. The only thing I change is that I modify my stop loss. If the trade goes in my favor, I just adjust it so I lock profits on the way up. Manually, that is. Yes. All right. So before we begin with the charts, I just want to mention here, guys, that this is not investment advice. It's not trading advice or anything. This is just my personal opinions. I am not representing Exness or recommending to take any action of what I'm about to say. Anything I'm gonna mention is my personal opinion. The account that you see on your screens is not a real account, it's a demo account. So yes, personal opinion, educational purposes only. Do not take action based on what I will say today, right? Okay, now let's begin. Gold, popular instrument, favorite of many a favorite instrument of many traders. All right. Okay. So what do we see on gold? From the technical side, I see that the price has found sufficient resistance on the upper band of the Bollinger Bands. By the way, if you guys have any questions about what are all these lines, can you explain what the orange line is, what the green line is, what the blue is, whatever you want to ask, feel free to go ahead. Or if you want any explanations on what a Bollinger Band is or a moving average is, feel free. Okay, all right. So sufficient resistance on the upper band of the Bollinger Bands, and then a slight bearish correction to the downside. Let me show you here. So we had bullish correction to the upside after support on the 50-day simple moving average, and then resistance on the upper band of the Bollinger Band, and we are currently in a bearish trajectory. Now, gold is affected by various factors, right? We have demand and supply, obviously. We have Fed monetary policy. We have the dollar bond yields percentages. We have physical demand from markets like India or Asian market in general. There is a lot of factors affecting gold, right? Geopolitics, obviously, in case of wars or general market uncertainty, people tend to buy gold as a safe haven, right? So a lot of factors affecting gold. Obviously, you cannot keep track of everything all the time, right? So I will analyze on the technical analysis perspective here. What my personal opinion, my personal thoughts on gold would be probably wait out to retest probably an area lower around the 4,130. I know if you only trade gold, that's not an ideal suggestion for you in this case, but again, that's my personal opinion. I am a long-term trader. That's what I would do if I was trading gold. Unless you go to lower time frames, in that case you can find more trades with smaller targets, right? Okay, so on gold, I would wait it out to see a retest lower around the 4,130, which is the combination of the 23.6 of the daily Fibonacci retracement and the 50-day simple moving average. It might not get to that low, right? Because currently we can see that the area of 4,200 is also the previous high here in mid-November. So this area might prove to be strong enough to support the price and keep it from declining lower. So we might get sufficient support on 4,200 and then a rebound to the upside, right? When in that case, we can find other targets for if it goes higher. Let me find, where is it? Anyway, okay. So if that happens, if we see, if we do find sufficient support on 4,200, we might suggest that we can retest 4,300, which is the area just above the upper band of the Bollinger Bands, and also the second target might be the all-time high around 4,360. Of course, to reach an all-time high, we will need in the current period, we might need a new catalyst in the market. We might need some boost for the price to reach 4,360, because currently we are in a somewhat bearish correction, and stochastic is not in the extreme overbought level. So that means that the bearish correction might continue for some time, or if the 4,200 is strong enough, we might see even some sideways movement, probably until the end of the year, if nothing new comes up, if Trump does not tweet anything crazy, or we see any new tensions around the world. Okay, now moving on to crude oil. Crude oil again is affected by different factors, including weather, Chinese production data, again geopolitics around the world. So it's affected by a lot of factors. So again, this is a technical move on crude oil. So what I see here is that we had some bullish correction phase starting in late November, and it respected almost perfectly the Fibonacci levels. I mean, we had bullish correction to the upside, retest of the Fibonacci 23.6, and then a resistance on 38.2, and currently again we have a test of the 23.6. So stochastic is not indicating any overbought or oversold sentiment, so we might see significant move to either direction, but that might take some time, because Bollinger Bands are not that expanded as in late October, let's say. They are more contracted, so that means that volatility it is there, but is not to a great extent. Also, the moving averages, you see here, the green line is the 50-day simple moving average, is trading below the 100-day. So that validates the overall bearish trend in the market, yes. We have neutral stochastic, bearish overall trend by the moving averages, and somewhat contracted Bollinger Bands. So this combination does not indicate or hint to any sharp or significant moves. So my take on crude oil would be probably trading between 23.6 and 38.2 of the Fibonacci retracement. This somewhat channel formation, you might say, it's not a channel formation, it's just two boundaries or two targets. Probably we might see a push above 38.2 or slightly below 23.6, like we had here the latest medium term low, if we can call that, in late November. But I would also suggest to check short-term energy outlook forecast. This is data from the Energy Information Administration. You can go to eia.gov, select outlooks, and then short-term energy outlook, STO. I tend to follow this because it gives a forecasted, not fair value, but taking into consideration a lot of calculations here. So the forecast from the energy administration in the United States is expected for the U.S. Crude oil price, WTI, to by end of 2025, right, to be around 50-ish, 50-ish dollar per barrel, and currently we are at 58. So probably there is some room to go even lower. It doesn't mean that the short-term energy outlook forecast is correct. It's just an approximation, but it's one thing for the crude oil price to be trading somewhere around the 55-ish, and it's one thing to trade at 70. That invalidates the forecast all at once, right? Okay, so that's my take on crude oil for the short term, at least for this week. Let's be realistic here. Next week we will have Michael taking on the live brief, so we can check what he believes on crude oil. But for me, for this week, I think probably some small trades between the two boundaries of the Fibonacci retracement levels here. All right, now let's move on to Bitcoin. So what I see on Bitcoin, you see too many lines here. What I see is that the Bollinger Bands are very contracted. That means that volatility is not there to support any sharp moves. So right off the bat, I am expecting some sideways movement in probably until the end of the year, right? I mentioned on the live brief 2 weeks ago where the price was somewhere around 87-ish, or yeah, somewhere around there. And I mentioned that I'm not convinced that the bullish rebound on Bitcoin is not real but sustainable in a way. Something like a dead cat bounce formation, and that's almost exactly what happened. We had some bullish push to the upside, then resistance on the 61.8, and then big bearish correction to the downside. And something similar is happening right now. We have bullish correction, reaction on the 61.8, and then a push to the downside. So what that shows me is that there is not much conviction to push past 93-ish, $93,000 to push past this area. So it's quite strong resistance for now. And also we have the upper band of the Bollinger Bands almost touching the 61.8. So from a technical perspective, I will say that I'm not yet convinced that we might see a Christmas rally for Bitcoin, essentially. But let's check on what's happening with fear and greed index. No, sorry. Okay, fear and greed index in general, we see that the overall sentiment is in fear. It's 31 points. Even stocks are in extreme fear. You see here the breadth, everything is in fear. Market volatility is in neutral levels. Safe haven demand, that's 20-day stocks and bonds. Overall, there is fear in the markets throughout, right? So sentiment is not there. Liquidity is not there. Volatility, sorry. No significant formations, no indications from technical analysis perspective. I mean, Bollinger Bands are contracted. Stochastic is in neutral levels. Moving averages are validating bearish trend. The 61.8 of the monthly. These Fibonacci levels go way back. They go back to April of 2025, right? So these are quite strong levels. So there is nothing there to indicate that we might see a massive push on Bitcoin unless something changes, like we get new data or new macro data, or if Trump tweets by end of the year that the US is going to proceed with the Bitcoin reserve and they are heavily investing in Bitcoin, or something significant to happen. Other things being equal, I do believe that we might see some resistance on 93, 500, and then correction to the downside. I don't want to say until the end of the year, but probably this week and the next might go somewhat sideways on Bitcoin, right? So if I wanted to trade Bitcoin no matter what, I would be targeting these two boundaries. Probably if you go to a lower time frame, you might find some formations as well, but overall, I think my personal short-term strategy on Bitcoin might be that. Yes, better late than never. Yes, hello Joyce. Probably you missed out on gold, but we can check again later on. Okay. So again, guys, if you want any specific instrument to check, please go ahead. Joyce, yes, we're gonna go through gold and Dow Jones. I think that's the instrument that you mostly ask for. Okay, now some interesting setups that I found on some forex pairs. One is Euro British Pound, where we have this bearish correction happening, and currently the price is trading in an inside support. Let me show you what an inside support, what I mean here. Is when the price is trading in an area where price reacted quite massively in the past. And that's what's happened in late September of 2025, where the price reacted multiple times around the current area, or around the current area of 0.87,400, right? So we have an area of price reaction, and then just one push to the upside, and then retesting this area. If it goes below this area for a second time, I mean, we had one time crossing this area here and then another time testing it here. If it crosses below, that invalidates the reaction area, and so this does not matter anymore. But for the time being, it does, because it did not invalidate this inside support area just yet, right? So what's my take here is that in combination with the 100-day simple moving average, which is currently acting as a support, the lower band of the Bollinger Bands, and the 78.6 of the daily Fibonacci retracement level, I might wait for some sorry guys, let me find the, where is it? Path, yes, found it finally. Okay, probably wait for a retest to the downside around the 0.87, and then wait for some reverse formation or bullish formation, candlestick formation, or trend for starting to build some long trades around 0.87. It is also the psychological support of the round number, so probably that's another factor supporting the price around there. And also 0.87 is is the area of the other area of price reaction here in mid-October. Investors are aiming for 100K on Bitcoin. Yeah, probably. Nobody knows. But from what I see, what happened to the charts? Okay. But from what I see, I don't see any significant indications that we might get to 100K before the year end. We might reach 100K before the year end. I'm not always right. I'm just saying that at the current period in time, I don't see any indications or facts to support that we will get to 100K. Even if we do get to 100K, my take is that we might reach the 100K and then we get massively corrected from that point on. So it might go like this, some sideways movement, and then increase to the 100K, probably go a little bit up above that, and then boom, big correction to the downside. I mean, the 100K is the psychological resistance of the round number. Obviously, it's a round number. So, but there is not sentiment to reach that. I mean, even if it reaches, it will most probably correct massively to the downside, right? Because without sentiment, right, everything is in fear, extreme fear. Without volatility, you see Bollinger Bands are quite contracted. So no sentiment, no volatility, no indication on the charts from different oscillators or indicators on the chart, no significant pattern. So how are we going to get to 100K? I cannot see how. Unless we have sent any new catalyst in the market. Yeah. Okay. So we discussed gold, crude oil, Bitcoin, Euro, Pound. I found some interesting setup on Pound Yen, but probably we're a bit too late. We have perfect retest of the 78.6 here, and then rebounded to the upside. Because this pair is based on USD, and we have the Fed's meeting tomorrow, I'm not gonna do anything on this chart before tomorrow's meeting, because I want to avoid volatility spikes. I don't really like the area to jump in just yet. I feel like we missed the train here. Probably there is some room to go, probably retest the previous high here around 157.4 probably, but not too much room for profit here, and also somewhat risky. I don't think it's too risky in terms of trajectory or if it will reach or something, but there's just not too much room for profit here. But yeah, interesting setup. I just wanted to show how Fibonacci levels work, right? And why I love Fibonacci so much, and why I mention it on every single live brief. Okay. Moving on to New Zealand dollar. Why do I have that here? Yeah. It's because let me expand a little bit here. It's because the price is trading exactly at a very strong resistance level, which is the combination of the 100-day moving average and 50% of the Fibonacci retracement level, and also is a retest of the latest high here. So we have a very strong combination of resistance to validate a strong resistance area here. We have retest of the previous high, so seems to be a pretty strong technical resistance. We also have stochastic oscillator in the extreme. It's 99 points. I mean, it just goes up to 100, right? And we are at 99. So extreme overbought. So we might see some bearish correction coming up. I'm not saying I'm gonna just start opening short positions here, but I'm saying that it might be a good idea to monitor New Zealand dollar to find any short entry points, probably somewhere at just below the 50% of the Fibonacci. If it comes back below, it might just continue going up and just keep the stochastic oscillator in extreme overbought conditions. Does not mean that we will see a correction to the downside. I'm just saying that it's an interesting setup and I'm just keeping my eye on it. All right. Speaking about interesting setups, we have Euro Yen, which is in all-time high. It just keeps pumping before the year end, before the Japanese rates change, and carry trade operations are not that profitable. So that's why we see a pump on the pairs trading the yen, both the USD and the euro, and probably pound yen. Yes. So we see a pump because near the year end, I think it's 27 something. I don't remember the exact date, but we're gonna have the let's check here, the Japanese interest rates. Sorry, 20. No, where is it? 19. Yes, 19th we have the interest rates expected to go up. So that means that carry trade operations, for those of you who don't know what carry trade is when you borrow in one currency, in this case the Japanese yen, because their interest rate is so low, it's 0.5%, and then you buy another currency, in many cases the dollar, again because of the interest rate. It's currently at 4%. It's gonna go to 375, as we mentioned in the beginning. Yeah. So you buy Japanese yen with an interest of 0.5, and you invest in the dollar with 4% return. So 0.5, 4%, you benefit from 3.5% interest, and that's essentially what carry trade is. And that's why currently the interest rate of Japanese yen is low, and that's why people are dumping it to buy dollars, or to buy euros, or to buy pounds, and that's why we see this pump. Now euro yen is in all-time highs, so it goes without saying, not the best area to buy it just yet. I would wait and probably start building positions right before the Japanese interest rates change, which is 19, we said? Yeah, 19. So probably around next week, I will start monitoring the Japanese yen quite closely, because we might see some big bearish corrections to the downside. All right, so I think this is it on my side on interesting setups. Dollar Swiss franc, we mentioned 2 or 3 weeks ago. it was the trading idea on our weekly market outlook. Let me show you what I mean. If you go on YouTube and search Exness, sorry, and you go to videos or playlists, we will have here weekly market outlook, right? So you click there, and
hello everyone, and thanks for tuning.
We have a pair that we analyze, and we give a trading idea on what to do with it. For example, last week it was about silver, right? My colleague Stan is analyzing a trade on silver. What is affecting silver this week? That week that the video was published. What can you do about it? What targets are potentially realistic ones to be reached, either to the upside or to the downside? So it's a trading idea that you can follow every week. We have a different instrument every week. It was silver. The week before it was Bitcoin. This is where I mentioned about dollar Swiss franc, which actually worked, right? We had a target of I think it was 81 cents, something like that. Yeah, and it was reached around here. So yeah, this is one thing that you can benefit from following Exness's YouTube account. We have a lot of content. You can watch our podcasts. We have trading talks, which is again my colleagues, me, Michael, and Stan, that we discuss every week different concepts that you can learn about, how you can implement it in your trading strategy, and you can also follow us on X. We are quite active there. We post every single day. Just search Exness and you will find us. We post every single day. We post charts, we post setups, we post news, what's happening on the economic calendar, different instruments. We have some interesting videos that you can watch. And you can also follow my personal X account. This is it. I also post every single Monday about my analysis on gold and crude oil. That's every single Monday, right? Monday. So you get the idea. Every single Monday you can go on my account and you can find my analysis on gold. Quite interesting for many, and crude oil, right? Occasionally I do also other analysis if we have some major earnings. For example, I did about Microsoft and Google and Meta, Adobe, Oracle, or anything. So you can follow Exness, you can follow me to remain in the loop of those updates. So YouTube, our Exness channel, and Twitter for some small bits of updating, right? Okay. So I think that's it on my side. Anything more? Anything interesting here? No. I was mentioning, just last one, I was mentioning about Canadian data in the beginning, and we've seen how unemployment in Canada is getting slightly better than expected, and the interest rates are expected to remain the same. So quite strong data from Canada as opposed from the United States, and that's exactly what we are seeing. We see a strong bearish sell-off of the dollar against the Canadian loonie. We see some slight correction to the upside. I'm not really convinced that we might actually get a correction to the upside based on fundamentals. As we mentioned, the data from Canada, and also from a technical perspective. Here we see Bollinger Bands are very quite much expanded, which that means that volatility is there. We have a lot of volume on dollar loonie pair. The only thing is that the stochastic is in the extreme oversold levels, but if fundamentals keep improving for Canada, it can just keep in the oversold territory. So that means that probably is not the ideal area to be shorting it. I mean, it's quite a risky area to keep shorting the dollar against the loonie, but you can keep track of it as it goes down. If it continues to go down, I might be wrong, and the area of the 138 might be a quite strong one to push the price to the upside. It's highly possible because we also see that is again an area of price reaction back in September, which is still valid because it was only pushed through once and is currently be testing again, right? Same scenario. It was crossed in late September and is currently being retested again today. So it is highly possible to see a bullish correction to the upside. It's not impossible, but if you are more biased on selling the dollar loonie pair, you may want to wait for some correction before shorting it again. It's not a very wise or risk reward area to be shorting it. Okay, so I think that's it on my side, guys. If you have any questions, feel free to post them. We can spend some time replying to questions, or if you have any instrument that you want to check, please go ahead. Otherwise, I think we can wrap this up if there is no questions. All right. So I don't see any questions on the chat. I want to thank everyone for being here. Especially the regular ones that join us every single week. I think this is me for the last time this year. I think so. So I wish you all happy holidays and happy new year if I don't see you again. For this year, we're definitely gonna be discussing again our stuff early January. Next week we have a live brief with my colleague Michael. He will be here, but I think the week after that. But Michael will update you on that. So I think that's it for me for this year. Thank you everyone for joining. Thank you all for your questions and instruments that you wanted to check. And yeah, wish you all happy holidays and see you all next year.